All right, we are back. Sorry for that interruption. Funniest part about that, guys, I didn't know that the stream was done. I tried to like come back, and I just came back, sat down, and started talking. So I probably talked for 20 minutes before I realized that no one was listening. Um, so that's funny. Uh, Very entertaining. But we're here. Okay, so I don't remember where I was when I stopped. So I'm just gonna go through this stuff real quick in the beginning because I think I was still on this price consensus EPS surprise chart when I got interrupted. Rudely interrupted by the ATF. I just been swatted. Isn't that what they call it, Jeff? When like the SWAT team shows up on those live gamer streams? That totally just happened. Oh my goodness, dude was beating down the door like he was ATF or DEA. Um, it was like I was watching Narcos live. Um, all right, so I went over this before, but like I said, probably interrupted some things. So I'm just going to touch on a couple of things. One, if you're watching this for the first time, because I'm going to delete that other stream. If you're not getting the notifications when we're doing these, shoot me an email, livetrader@zax.com. I'll make sure you get on the distribution list. That's one. Two, we have a chat room, free to come in. It's on Discord. That link is going to pop up here. It's like a little P and then like an M, and then there's some letters in there. It's going to pop up here on the bottom of the screen coming up. All right, so why don't we go ahead and get into this? So the black line corresponds to the right y-axis, which is price. The multicolored lines represent the evolution of our Zacks consensus estimates over time. Those correspond to the left y-axis. The green arrows are earnings beats. The red arrows are earnings misses. And what I wanted to point in about Google was the dipping of the estimates, and then the dipping of the estimate here. So this is kind of surprising to see. And then when we start looking at the numbers, you're really going to see some significance in that, these next year revenue and EPS numbers here on the Google. Okay, so a couple of things there, and then we have the growth though. The growth story is still alive and well, and here's the thing though, is that Google has a tendency to miss. It's been a while since they missed, I guess, just a couple of quarters. Well, it's been a couple quarters since they missed. But look at like this whole string of misses that they had. So I mean, these guys come in and drop the ball sometimes. So, well, hey Tracy, welcome. There's a new name. DeKey was here earlier. I think I scared him off. Now he's gone. Nowhere to be found. Always glad to see new names. Welcome. I was just commenting about how hilarious it was when the maintenance guy just tried to burst into my house and screwed up the last live stream. Okay, so overall we still have growth. Nice trajectory, but I'm concerned about this dip here. That's the moral of that story. And you'll see I'm already scrolled down because I did all this already to myself just a few minutes ago. So they are going to report after the bell mañana, so you got the rest of the trading day today and all of tomorrow to figure out if you want to mess around with this at all. Then here, let's take a look at the revenue numbers. Current quarter got 20% revenue growth. Hey, Dr. Paul, how you doing? Next quarter, 18.99. Current year looks like 20. Next year is going to be 17.67. You missed the drama, but you're here for the important part, and that, my friend, is what matters. Google's going to be a $100 billion revenue company next year. Let that marinate. $100 billion in revenue. That's a lot. That is a lot of stuff. A lot of money, man. It's a lot of money. but they're going to need, another 17-20% to get there. Let's look at the EPS side of things. This concerned me. I was expressing my concern to myself 20 minutes ago when I was talking to no one and my stream went down. 6.9% contraction in EPS for the current quarter. Next quarter, you're going to get 4.45% growth. But overall this year, there's no growth this year. You're talking about negative 9.82% here. And then the next year, it looks like 31% growth. Wasn't that incredible? Mike, I'm telling you, it scared the bejesus out of me. It's like, boom, 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 boom. I was like, whoa. And he did it twice, but whatever. And then he's smiling. He was actually doing something for me. I was probably rude. I got to go back out there and say, hey, man, thanks. I'm sorry. I was in the middle of something. You really caught me off guard because I was like, the face that I must have gave him was like, dude, get up out of here, man. It's funny. All right, so look at this, though. We got bearish behavior. Over the last 60 days, you have 6 analysts dropping their numbers for the current quarter, 13 for the current year. This is what I'm going to focus on, I think. 13 for the current year. Next year, you look like 7 analysts that have dropped their numbers for next year. Over the last 60 days, you have 3 bumping them up for the current quarter, 6 for next quarter, 5 for the next year. So there's some disagreement overall, right? Here and there. They're arguing here, left, right, boom. But they're not disagreeing on the current year. There's a couple of yahoos out there increasing their numbers, and the vast majority drop their numbers. But what was the overall effect to our Zacks consensus estimate, right? It's gone from 845 to 843 for the current quarter, so there's nothing there. 974 to 978 for next quarter, still really nothing there. The current year, though, 3188 down to 3098. Now, any other company, this would be bananas, seeing such a huge move in EPS. But when you're making $30, what's a buck here or there, right? And then if you look at next year numbers from 4072 down to 4059. So there's all sorts of stuff going on here, right? Then now you look at the surprise history. Been a little bit of a surprise. Look at that. I think there's some gremlins in this house, man. Look at this. There we go. Bezos is Amazon. I think we're talking Alphabet right now. Right? 14.12% for the current quarter. Was I saying Amazon? Have I been saying Amazon this whole time? Because we're definitely talking about Google. I got Amazon on the brain, though. I've been ordering stuff on Amazon a lot. Trying to get this house together. That's why I'm like the helter-skelter, dude. I'm all over the place. Last quarter, a little bit of surprise, and then we had a disappointment here. So overall, I don't know. I wouldn't. I'm not really all that excited about this right now, right? Not really. Let's look at this. Okay, you forgot yours. They might be next to mine because I can't find mine either. Look, I already cut ahead to everything. I did such a great analysis here, and I got to try to remember what the heck I was doing to redo all this. Revenues, okay? Solid revenue growth. A little bit of a lull. 2015 certainly. And then have accelerated out of it. So that's pretty good there. On the EPS side of things, we got, let's see, 21% last year, 11% this year, 31% next year. So, 2018 is where it's at. Specifically this fourth quarter. I don't know what's happening out there, but I guess they got a spaceship or something that's coming because they're bullish then, okay? So I'd like to see what are they hiding? What's Google got? What's Alphabet got in the pipeline, right? But this is kind of troubling. Last quarter's just $5 holler, right? Is that what that is? Sure, some investments, I'm sure. So this was the coolest thing I wanted to show you. First, trailing 12, well, future 12 rather, future 12-month earnings. So S&P's up to 18 times. The Goog's at 25 times. Who do you want to compare Google to? When I was talking to myself earlier, before everyone was back here, I did Facebook, and this was surprising to see this Facebook approaching the valuation of Google. I didn't realize that about Facebook, but that's pretty cool. And I know that Google and Facebook obviously are in sort of different areas, but in terms of advertising, online, mobile, this kind of thing, right? They certainly have some crossover in their business, right? Definitely. Competing a little bit, perhaps. Okay. And then the other thing I wanted to show you is price to sales. Now, you remember price to sales in the S&P 500 right now is about tree. What is it for Google? 6.6. Facebook trading almost 10 times sales. But Google's still twice the S&P 500. Of course, you get the nice growth in the revenue numbers there, but certainly not out of whack in terms of historical valuation from a price to sales standpoint for Google. And what about that? What about that PE? Forward PE in this case. This is kind of accelerating a little bit. Out 25 times earnings. You had that part of last year, but really haven't had that since pre-recession levels. I mean, it was way higher here in the 40s, but giving it back a little bit. Okay, so there's that. A little bit of valuation. Just some food for thought. I like to check that out, make sure we're not completely out of whack. To give you some perspective over the long term. Is this overbought? Is this oversold? What's going on here? Okay. Now, Google hasn't had any big moves on earnings since a 7% move in 2015, 19.81 in June. So you got some stuff going on back there, but recently has not been a lot of movement. And we're going to check out this options chain here. Go from the stack view to the side by side view. 988s. So that means we're gonna have the 9. Oh, not this one. What's going on here? Getting some bad data. Don't give me bad data. Fire this up again. It's getting good data before. Don't mess with me, guys. All right, there we go. Hang on, guys. This guy's I've angered the bar chart. Let me see if I can reel this one in. First, I'm gonna pull this up. Now I'm gonna pull them back here and reel them in because these numbers were a lot different. I guess they weren't that much different. They were a little bit different before. Both of these numbers have increased since I did this 20 minutes ago, just so you guys know. It's not going to make it easy for me here, but the at-the-money put trading 1830 by 2040. Yeah, that's right. So that means the midpoint is 1935, okay? And the much wider on the put side. I guess not too much wider. $1.50, $1.40, 140 on that side. So we'll call that 70 cents. So 2040 plus 2040. So it's not wider, just looks wider. Optical illusion, folks. Still looking for about $40 holler. Okay, 39.79, which is about 4% at the current price. Okay, so they're looking for 4%. They're looking for $40. Now here's the cool part I was doing before that I did quite impressive, and now I'm gonna have to switch it up. Rather than looking at this front week, what I want to do for you guys is I'm going to look at the November expiration. But then I'm going to go back to the front week. That's right. keeping you on your toes. I'm going to illustrate something for my new people that are out there. Okay, so when you're messing around with a stock that's $1,000 a share, going long, right, with these debit spreads, it's going to cost you a few bucks. Okay, and so with a market like this, it's pricing in a $40 move. You know, even if you did the halvesy, that's a $20 move, right? So you're going to have to put almost $1,000 at risk. And we're not in the business of doing that here. We like to keep these much closer and much tighter, right? So one thing I wanted to show, did this happen properly? I wanted to show you, if you go out to a further expiration, the risk reward should be a little bit different than the closer expiration, given the same parameters. So here, I want to show you this. And this number was better before too. Well, that's upsetting. All right, so let's say you wanted to sell out of the money call spread here, okay? So what does that mean? That means you're selling the 1,037.50 call. Just funny to say that. You're going to get $9.45 for selling that, right? Basically, I'm just looking at the center of the bid and the ask, and that's where you're likely to get filled, right? Somewhere around there. Simultaneously going long the 1040, it's $8.95 that you're going to pay for that 1040. This way you limit your risk on this trade. So here, 50 cents is the net credit on this trade. Now the difference in these strike prices, oh, that's why this is different. I went out too far. Hang on, guys. Hang on. Hold, please. Wanted to go to the 1027. This is $40 out. Okay. Restart. So you guys see how I did that? Stock's trading 988, basically. Let's just call it 987.50. They're looking for about 40 bucks. So you add the two of those. It's 1027.50, not the 37. I got my eyes crossed. Okay. All right, now we're talking. So what do I mean by that? How do you do this? You sell a 1027.50 for about $12. Simultaneously buy the 1030. It's going to cost you $11.20. So your net credit here is going to be 80 cents on this one. Okay. Now difference in strike prices is $2.50 minus that 80 cents is $1.70. So the total amount of money you would have at risk by selling it out of the money call spread on Google here would be $170. The most you can make is at 180. So you can make 180, have $170 at risk. You can make that 80 on $170 at risk, not 180. That's 47% that you can get on this. So what has to happen? Shares of Google have to close at or below 1027.50 at expiration. Okay? So now what we're going to do is we're going to jump up 1, 2, 3 weeks, right? So we're going to cut 3 weeks of time off of this trade, but I want to keep the same price levels, the same strike prices. So what happens if you went short the 1027, 1030? If you go short the 1027.50, 1030, you're only going to get $5.50 for the 1027.50. Then you're still going to buy that 1030. It's going to cost you $4.95. So here your net credit is less, so 55 cents. Difference in the strike prices is still $2.50. Minus that 55 is $1.95, which is your total amount at risk. So you can make 55 on $1.95 or 28%. So notice how that number becomes a lot less because there's less time value in this than there is in that further out thing. Now, why would anybody want to do this? Okay, Let's go pull up the chart. So Google has been in this consolidation range since a gap up on earnings. Notice the huge gaping hole in the volume distribution here. Basically, what is that, 1010 and 927.50 or so, right? And note how the 200-day moving average starting to get into this gap range and is right near the bottom end of that, okay? It's kind of carving these things out. Other thing you have here is you had an overbought commodity channel index that has come down through the zero line. That is a sell signal, my friends. So there's actually a technical sell signal on Google. It's butted up against resistance at the top side and then now given a sell signal. So if there was not an earnings report, I would say, well, yeah, I'd just short that, stop here, target here, call it a day. But we have an earnings report, right? So it adds this extra level of risk. But what you're doing when you're shorting that 1027.50, you're basically saying, I don't think that Google's going to break out to new highs, new all-time highs on this earnings report. And so I'm willing to sell that premium out there. Like, I just don't think it's going to happen, right? Now, there is a way that you could make this range-bound bet. You could basically bet that, you know what, Google's going to keep in this range, I think. I don't think it's going to break out to either side. I think it's going to keep on this range. There's a couple of ways to do that. One of those, with a directional bias, is selling that call spread out there. So you're basically saying, anybody betting on this going up here is wrong, and I will take that money, right? I'm taking their money. Anybody that bets up here, I want to take their money. Anybody that bets down here, I want to take their money. So you can do this by selling a call spread here, and then you can sell a put spread out of the money also, right? So that's why, I don't know if you saw the good Dr. Spot here, the good Dr. Paul, talking about ICs, iron condors. Now, these guys might be talking about Buffalo Wild Wings. I don't know what they're talking about. But that's where you do just that. So you sell it out of the money put spread, sell it out of the money call spread, in the hopes that this thing kind of bounces around. Now, if you noticed, what was the difference there? So you could get, what, 28% for just that first week? So, what, 2 days? But you could get 47% if you waited 3 weeks. So 17 trading days, basically, right? This is what I'm going to say you should look at. Is you go out to November and you look at a condor in November. So you sell that out of the money call spread, but you also sell it out of the money put spread. Sorry, guys, I got the 90s R&B music going on, and every time I hear a good one, I got to turn. You know, I don't know, man. I'm having flashbacks to middle school here. In high school, of course, the dances, good times. All right, so Google's even creeping up on us a little bit, but out of the money put spreads, you want to be down here in the 950s, 947.50. We're not going to get one of those. You could use the 945s. You can go out as far as you'd like, okay? I wish we had more strikes out here. Oh, we've got to show. Am I showing all? Yeah, I'm showing all. Okay. All right. So back here on this put side. Now the numbers are going to be a little bit off because we don't have a 937.50 here, right? We've got a 940, a 945. We got a 9. So we're not getting the intermediate ones that we wanted. 947.50 is really where we want to be. So we're not getting that. So if you notice, there's going to be a little bit. There's going to be a difference here. in the terms of the money you have at risk. If you were selling the 945 put, you're going to get 1080 for that. That's a lot of money, right? But simultaneously, you're going to buy the 940 put. Means you're going to give back 930 of that. So the net credit here is going to be 150. Now the difference in strike price is 500 minus that 150 means you got 350 at risk, okay? So the most you can make is 150 on 350 or 42.8%. So you can make 42% on this end, and you can make 47% on the other end. So this seems like a pretty decent condor if it were to stay. So this is what I'm going to tell you guys, right? I think if you're bullish, you should do a bull credit spread using the... I still think you should use the November 17th. That 10.2750, 10.30. Short those calls for, what was it, an 80-cent net credit, right? Bear credit, or I'm sorry, that's a, goodness gracious. Let me fix this. Bear credit is short the November 17th. 10.2750, 10.30 call spread for an 80-cent net credit. The bull credit is right here, which is short the November 17th. 9.45, 9.40 put spread for 150. Okay, I think the trade that pays here is going to be the November 17th 10.2750, 10.30 slash 9.45, 9.40 condor. Okay, and the way you can make it work, if you really want the numbers to be perfect, rather than increasing the difference in the strike prices on that call spread, just do two of them. So you do two call spreads at the 10.2750, 10.30, and one call spread at this 9.45, 9.40. Okay? So I'm going to run through the math here for you. So what happens is, okay, and I'm going to pull up the chart here so we have a little bit of visual, okay? All right, so if you sell the put spread, you're going to get 150 in net credit, right? Now you sell one call spread, you get 80, and then another call spread, you get another 80, okay? So the total amount of money that you guys are going to put in your pocket here is going to be 310. So your net credit here total for this is going to be 310. Okay? All right. Now, let's say, so we have 10.2750 on the upside, and we've got 9.45 on the downside. Okay? So fast forward to November 17th. If Google is above 9.45 or below, right? So if it closes anywhere in here, you keep that 310 profit. That's what you make on that trade, okay? Now, what happens if Google winds up rallying like crazy and going all the way to a bazillion, right? Doesn't matter where it goes. Anywhere past this, well, past actually 10.30, right? So 10.30 and up, what happens? Well, you're going to lose $250 on that trade. times 2. You're going to lose $500. But your net, and Dr. Paul is hitting it on the head here, your net credit was $310 already. So $190 is what you're going to end up losing. Okay? You're going to lose $190 on that side. All right. Now on the flip side, what happens if it breaks down below 940 and goes to 0? Well, your call spread is going to profit. You're going to be in the money, no problem. But this side, you're going to lose money. What are you going to lose? The strike price, difference in strike price is $500. So you lose the 500, and again, you had the 310 net credit. Boom, you lose 190. So your maximum risk on this trade, guys, the most money you can lose on this iron condor is $190, plus obviously your commission and whatever, right? And I'm sure in the numbers, you know, they're going to be shifting, they're going to be changing, give or take, okay? But 190 is the amount of money you have at risk. And the amount of money that you can make here is 310. Think about that. You could potentially make 310 on 190. And all you need is shares of Google to bounce between 945 and 1027.50. You make 160% on this trade, just as long as Google doesn't break out. Okay? Now here's the thing, guys. Guys and gals. I just say guys in general. There needs to be a people, is there a term? Just a non-sexual term or non-gender specific. I got to work on these things. Anywho. If Google rallies up in our face tomorrow, right? There's no reason to stress out because time's on our side. Just wait to see. Maybe it starts to trickle back down, okay? Time is on your side on the Iron Condor. You're going to have to stick around. You're going to have to, you know, just kind of grin and bear it, okay? That's what's going to happen. But yeah, it's pretty cool. So that's why I think the trade that pays is the Iron Condor here on Google. We haven't talked Iron Condors in a while. Glad we got to talk about one today. And honestly, I mean, that looks pretty darn good. Jack's got a question about a lotto. Jack, it's going to be tough here because it's expensive, right? But if these are, you know, when I look at these lottos, I'm trying to make it like $40 a contract. And you're not going to get $40 a contract on $1,000 stock. So it's very expensive to play around with these, Jack. Okay? Yeah, Trevor, you got it, man. Can we do this trade for a week? Yeah, you can do it on a week also. And what's going to happen is your numbers are going to be not as attractive, okay? You're not going to get as much. But let me address Jack here first. So, Jack, you see what I mean? Like, look how expensive it is. It's going to cost you $400 to buy the 1030s, right? $550 to buy the 1027.50. That's expensive, bro. That's expensive. And, you know, I don't know too many of you guys that want to roll the dice on $400. With a stock like Google that only moves like 4% most of the time anyway. I wouldn't mess with it, Jack. I wouldn't do it. Just wouldn't do it on this one, okay? Every once in a while we get good ideas on lottos, but it's not here. I want to do the front week real quick. Trevor, yeah, you can do it. So here you're going to get 55, okay? 55 cents on the call side. And look, we actually have a 942 here. So that's only 32. This is, you got to try to massage this a little bit. Because look, it's more attractive here. It's more attractive for this one. But that's because these bids and asks are messed up, I think. Look, here's 70. Maybe pinch it in a little bit. You can make a drift in here. And yeah, guys, don't forget, we're doing the morning after on Google, so we're going to find something. So look at this. If you went 947.50, Trevor, just a little bit, tick it in a little bit, 405 minus the 330, That's 75-cent net credit right now. Plus the 55 from before, that's 130. Difference in the strike prices is 250. Amount of money you have at risk is 120 on this, so you can double up. You can double up on this too. Okay. Little bit of an oxymoron in that sentence. Aren't metrics like a non-financial metric? Like a no numbers number. May have a jump in their hardware side. Yeah, from what I'm seeing, Fernando, I had an earnings report up here. I got rid of it. Darn. I had a. This is the thing, Trevor. Also, you don't have to keep. You could put on the Condor out to November, but you don't have to keep it to November. You could close it because a lot of the implied volatility is going to get sucked out of it. So you could close it for not the huge gains, but you can close it for some gains really quickly. Okay. So the non-financial metrics for Google, talking about their hardware and such. From what I read inside of these reports, Fernando, it's not enough to move the needle right now. Apparently, okay. Otherwise, it would have been all over these reports, and it's just not. Video is still in the reports. Mobile is still in the reports. Other bets and such, they haven't. It's almost like they're tinkering, right? They're still tinkering. Okay. I'm not sure, Fernando. Why don't you do me a favor, man? Send me an email, and I'll see if I can hunt that stuff down for you. Because off the top of my head, I don't know exactly where to find that for you. So shoot me the email, livetrader@zax.com, or dbartosiak@zax. I mean, everybody knows my email. It's not like it's hidden. Send me an email, and I'll see if I can, kind of spell out what you're looking for, and I'll see if I can figure it out today. Because I don't have to do Home Run Investor anymore, so I have time now on Wednesdays, which is fantastic. I gotta find that maintenance guy too and apologize because I'm sure he's terrified of me right now. Oh, I got boxes everywhere. Holy smokes. Anyway, okay, my friends. So official. I don't think Alato's gonna work here. A, B. Iron Condor looks like a champ. So we'll see. Hey, there's a C. That's funny. And I'm out of here, guys. So thanks so much for hanging out with me here today on Zach's Live Trader. I will be in the chat room later. Check me out over there on Discord. And again, if you're not on the distribution list, livetrader@zax.com. So thanks so much for hanging out with me here today on Live Trader. I will see you all later. Have a good one.